Hello, everyone, and welcome to today's webinar. I'm Mohammed Ashanti from Fxpesa, a market analyst at Fxpesa. I'll be your presenter today, and in today's session, we'll be talking about how and learn how to use technical indicators for profitable trading. Just before we start, just to make sure that you guys can hear me very well and you can see these slides very clearly, please send me on the chat or in the question section that you can see both of you can actually see me, see the slides, and also can hear me very well. If you don't mind, please send me through that question section, please. All right. Okay, so today's topic it's a very interesting topic, by the way, especially for people who love technicals, who love trading using technicals, especially trading the 1 hour charts, 4 hour charts, and like daily traders who love to enter the market, get 40 pips, 30 pips, and get out the market really fast. So we will be using the technical indicators. I will show you how you can actually read any indicator in general, okay, and how you can actually exploit the indicator, and how you can actually create a system for yourself to trade any market in general. And based on that, you can actually go to any market, whether it was commodities, gold or oil, stocks, forex, any any other market also as well. It can actually work on bitcoins, any market that has prices, and you can actually put indicators inside the trading platform. By the way, for any question that you guys have, please send them through the question section. We will have a Q&A session the last 10 minutes, and I will gladly answer all your questions. Hopefully I will give you a lot of benefits from today's session. So starting with today's webinar, so why trading with indicators? What are indicators at the Forex? Are they why trading with the indicators in Forex is the best way to go? So first of all, we need a lot of traders use different types of analysis. So some traders use fundamental analysis, some traders use technical, and some mix between them. Okay, others use sentiment, others use different types of trading the market. However, professionals use both of them, but many professional traders sometimes have different way of trading, different way of let's say using different indicators or different way of analyzing. One of the ways is price action. What is a price action? Price action is the movement of a certain asset plotted over time, and it forms the basis of all technical analysis as for the stocks, commodities, or other assets charts. Many short-term traders rely exclusively on the price action. So basically, they look at the candles, they wait for a certain way the candle moves, and then based on a shape or a form, a certain shape or a form, he decides whether it is bullish or bearish, and he takes the trade. However, I believe price action, especially in the Forex market, there's a lot of guesswork over here, because there are many shapes for the Japanese candles, many certain or indefinite, let's say number of forms or shapes for a single for the price action to make for the candles. So basically, a lot of time you would see, let's say, an engulfing or a certain pattern. It wouldn't go your way. So why would I actually use something that there is a chance or a small chance that it might not happen the same way that I analyzed? So I would rather use something else which is more accurate to me, rather than using something that with a guesswork. For me personally, I would look at price actions. I would look at certain candles. So for instance, I would love to look at the doji. I would love to look at let's say very bullish candles, like a certain let's say a white knight or a night crow and so on. But some others I wouldn't even look at. I would rather use indicators. I'm a heavily reliable indicator guy, especially as a trader. That's why I would use indicators in general for my trades. I would link them to fundamental analysis. However, this is not the topic for today. So we'll talk exclusively on technical indicators. So what are they? So technical indicators are mathematical tools that analyze one of the five following figures: the open price, the high, low, and closing price, and also the volume. As a result, based on that mathematical equation, you would get a result. Either you would see it as a line, okay, going above or below something else, or maybe a crossover between lines, or even for instance, you would see a plot of arrows either up and down depending on the indicator itself. Sometimes they overlay the price charts. Sometimes they are drawn in below the chart. So we'd have a naked chart. I would show you in the MT4, just to make sure that you guys can see the MT4. Just send me please on the chat section that you can see the MT4. All right. So this is the chart over here. You can see this is a naked chart. There's nothing. Only the price action analysis. Basically, you look at certain, uh, let's say, certain candles, and based on that form or shape, you would actually enter. So for instance, this is the macro over here. Also, three candles are based on it. You can actually trade, or you can see a doji, for instance, somewhere like this, and basically you can trade. So this is mainly using the Japanese candle, which is I don't like. Why? Because the Japanese candles is very old, not modern type of analysis, because it's actually been used for rice and commodities in general. Okay, it was originally invented like in 1700s, which is way before our time, way before even the forex got invented. So I would even look at it. I would actually use some of it, but not the, not dep- I would never depend on it heavily. So I would use another thing. So basically, this is a naked chart. By adding certain indicators, you would have either indicators inside the chart or below the chart. So let me give you an example. So you would have, for instance, moving averages. You've heard moving averages before. So prices, either you would see a line over here. It would give you the moving averages of the current prices, and which is, as you can see, it's on the chart now. It's overlaying the prices. Or you would have another indicator that's below the chart. For instance, something known as the RSI, very well known indicator. A lot of traders use it, especially stock traders. So it's below the chart. So you would have two types of indicators: one inside the chart, one's outside the chart. And we will talk heavily on how you can actually read any indicator in general below the chart, or any indicator above the chart, inside the chart. Okay, going back to the slides. Oh, sorry. Going back to the slides. So why would I use indicators? Little guesswork. You can actually customize the settings the way you see fit, based on your analysis, based on your testing, and based on a certain indicator. The way I would love it fast enough, I would love the indicator to be very, very. I would love an indicator give me really few signals. Another indicator would give me really fast signals, and so on. You can play and customize with the settings. You're not obliged to stay with a certain setting. You can play however you want with these settings, as long as you see it fit. Many of the indicators are created and updated recently. There are many indicators that are being updated and have been created for the forex market, especially, not just only for shares. So for instance, the RSI is created, I think, in the 1970s. It was not created for forex, but rather created for shares. I wouldn't use it similarly in the forex market, because originally it was created for the purpose, for based on supply and demand purposes. As for the how if you want to use the same concepts on the shares. You cannot use that on the Forex, which is why you need more modern and updated. And the indicators, it allows you, because it's a mathematical equations. Basically, the dev guys, or the IT guys who actually create and write the codes of the indicator can actually update the equations, which are more suitable for today's time. We have a certain rules before I go to any certain indicator. There are certain rules that I would love everyone to know about trading the indicators. You need to understand that one indicator by itself cannot make you successful. You need a bunch of indicators, or a certain, let's say, 3 or 4 indicators together, so they can give you more confirmation about your upside, to decide whether there's a signal to the buy side or signal to the sell side. So you need more indicators to confirm each other, and that's why you have better probability of entering the market. So if you, let's say, you are using a coin toss, the chances for you to enter the market is 50-50. Similarly, prices can go up and down 50-50. Using indicators, we need this, let's say, this ratio to improve from 50-50 to make it 60 or even 65% better. Okay, sometimes the best indicators, the best system together can make you get 70%, which is way better than a normal trader can handle. Also, another rule, which is one of the main rules for any indicator that you trade, always trade the closing price or the opening of the next price. Never use a signal during the session, during the candle session. So for instance, I'm trading let's say, the 1 hour chart, and currently, if you look at here, if you look at the sorry, if you look at the candles over here, currently the time is 4:12. Okay, now the signal, this could give me a signal now to the downside. For instance, the RSI, for any reason, it would give me a downside, let's say. But however, it gave me during the session. This signal could come back later on and show me that at the end of the candle, there wasn't a signal at all. That's why I would rather wait for the end of the candle, because the signal or the indicator would give me the last frequent movement of the indicator itself. So sometimes you would see a cross, for instance, at an indicator. However, that's during the session. However, at the end of the session, that cross wasn't there. So that's why it's better to use the end of the candle, the closure of the candle, and after that you make the trade. Okay, that's one rule you need to follow all the time. I would recommend you to use that. Never use the indicators during the session, but rather the end of the session. Also, the higher the time frame, the more accurate the indicator becomes. Okay, so why is that? Because the indicator depend on data. Okay, certain, as I told you, the open, the high, the close, and so on. The higher the time frame, the more data it gets. So the more the accuracy of the item becomes. Okay, the more the accuracy of the calculation becomes. Lower data, or let's say, not so much data, would give you a certain degree of correct answer. However, the more, let's say, number of data that you get, the more statistically the indicator or the calculation could be truer or better. Okay, so I would, for me personally, I use the daily chart for taking a trade. You can use the 4 hours or the 1 hour. However, the higher the time frame, the better the indicator becomes. Okay, also, some indicators works very well in the stocks market, but it doesn't do that in the forex market. That's why you need to understand the concept of the indicator itself. So, for instance, the RSI depends heavily on the supply and demand of shares. Okay, the overbought and oversold concept. It cannot be applied similarly to the forex market. Why? Because in the forex market you are dealing with currencies. The currencies, you never hear, for instance, there's a single currency has finished, or the number of currency finished. No, the number of currencies continue, and it's almost infinite. That's why the supply side is not relevant. However, the demand side that plays part. So you're trading something, the demand side only works. However, if you look at commodities, no, supply side plays a part because there's a number of ounces you can actually trade or number of shares that you can actually trade. There's not, for instance, a company has a million shares. You cannot trade more than a million shares, cannot buy more than a million shares. So the supply side is decided. So you can tell if there is a supply side or not if they actually increase the shares, for instance. For the forex market, it doesn't work like that. Okay, that's why the RSI concept I cannot use it on the forex market. Okay, it doesn't make sense. So I need something updated, something better that gives me more accuracy. Also, more the MT4. If you use the MT4, the MT4 has 35 indicators. Am I obliged only to use the 35? No, there are more than 10,000 indicators out there. However, there are many of them are not really good because they were written by not mathematicians, but rather by developers who would love to create a system and they sell it, such as robots and so on. You cannot tell how this robot worked, or how did they actually create the system. That's why it's you need to be a coder, and not a lot of people can be a coders to understand what they are doing. That's why you need to understand the indicators concept, from where did it come from, and how they actually improved it later on. They need to give you the formula. However, we're not supposed to know the formula. Not a lot of people know the mathematical equation. That's why I'd rather use an updated version of already known indicators. So for instance, there are many indicators related to the stochastic, updated version of the stochastic itself. Okay, so I would look for an updated version of the stochastic online. Okay, but not the stochastic itself. Okay, the media only focus on the most famous or the most searched on. There are many indicators nobody knows about, and nobody knows that they are really very well. You need to search for them. You need to seek them. There's a hard work here. You need to seek out these indicators, and you need to test them. This is where the main game here. Okay, always test before starting using any indicator. I will show you how you can test and how you can read. Also, the fundamental versus technical. So we have a lot of fundamental news that could affect the market. So sometimes you would see an indicator give you a signal. However, the fundamentals came just now, let's say, and give you something completely the opposite of what's going on. So at the end, the technical side must follow the fundamental. So the fundamentals in the long-term view is the main way to go. However, the technicals here are the way to enter. So it gives you a really better perspective of when to enter the market. The fundamentals, for instance, I know that interest rates are low. Basically, this push gold prices. So I know in my mind that there is gold price is gonna go higher. For instance, I need to find a really good spot to enter the market, or a really good price to enter the market. Okay, and how can I tell that? By using indicators. I need an indicator that tells me, for instance, a bullish signal to the upside might happen. So I would enter from there. As for the EAs, a lot of people ask me about this. Should I buy a robot or not? Should I use a trading signal machine that pay for it or not? I would recommend anyone not to buy anything from that, because you can create your own by yourself after learning how the indicator works. So I wouldn't recommend anyone to buy an EA, but rather actually create your own. And therefore, you didn't need to pay someone money to get signals, to buy signals, or someone who actually gives recommendations, for instance, a recommendation based on a robot. But rather, I would actually use my own analysis and compare it to the robots. Okay, and then maybe I would actually see if I'm bullish and they are bullish, the chances that prices might go up. Okay, so this is my take on the indicators. And before we go inside, we need to know what types of indicators that we have. So if you look at the indicators in general, there are For me personally, I look at them as three types and others. So we have three types of indicators and other indicators. So the main three types are, first of one is two-line cross. So let me show you what I mean. Two-line cross. A two-line cross is an indicator that has two lines and they cross each other. Whenever they cross each other, that's a signal. Okay. So for instance, if you look at if you look at, for instance, the stochastic oscillator over here, the stochastic oscillator, basically, it is a two-line crossover. Okay. So for instance, whenever there was a cross over here, that's a signal to the sell, and where there is a crossover to the upside, that's a buy, and so on. Okay, a two-line cross. Two lines cross each other. Yeah, that's an indicator. Now another indicator that would called let's say a zero line cross or a middle line cross or a line that cross a certain line, another line. So for instance, we have, let's say, the RSI. Okay, the RSI, basically I can do it this way. I can add the 50 line. All right. Now, if you look at this, every time the RSI line cross above the 50, that's a signal. That's an indicator. So this is a signal to the upside. Every time the line cross below, that's also a signal to the downside. Okay. Every time it goes up, that's a signal. So a zero line cross. Okay, a zero line cross. Also, we have indicators inside the chart, so such as moving averages. We have also Ichimoku, an indicator like this. Okay, an inside indicator. It gives you many things. Okay, I will talk about it later on. We have also, for instance, the parabolic SAR. The parabolic SAR over here, as you can see, it gives you a dots inside the chart. Whenever the dots become below the price, that's a signal to the upside. Whenever it becomes above, that's a signal to sell, and so on. So over here, this is a signal to sell, signal to buy, signal to sell, signal to buy, and so on. Okay, so many ways of looking at it. Okay, let me see if there is any question. All right, so these are the types of indicators in general. We have a two-line cross, we have a zero or a middle line cross, or inside chart indicators. Right? We have also another indicator where there is a two-line cross and at the same time a middle line cross. For instance, the MACD. Okay, the MACD. All right, the MACD is an indicator. Sorry, if you add, for instance, the MACD, you would see it this way: a two-line cross. Okay, and also a zero line. If you look at here, it's a zero line. Yeah, a zero line cross. Whenever the two lines go below it, that's a signal, and whenever both of them give you a cross between them, that's also a signal. So we have a zero line and a two line cross together. Okay, so that's another type of looking at the indicators. Also, we have a volume and volatility indicators. So we have an indicator that tells you there is an oxygen in the market. There's oxygen. There's a lot of liquidity inside the market now. You can find them either online or you can find them inside the MT4. So for instance, the MT4, one of them is called the ATR. The ATR basically doesn't tell you anything. It tells you only one thing, all right? It doesn't give you direction. It doesn't give you up or down. It tells you only the volatility. So if you look at the average true range, it's only one line, but there's no crosses. There's nothing to cross, so it doesn't give you a signal. So it only gives you if whenever there's a volume, it goes down. Well, sorry, whenever there is a volume, the ATR goes up. Whenever there is no volume or volatility, the ATR goes lower, and so on. So there are different volume indicators. Also, if you look at, for instance, let's see another one. So we have the commodity channel index. We have this. This is this is a CCI. This is an indicator similar to the way whenever prices cross below, whenever the prices cross below the 100, that's a signal. Whenever it crosses above the 100, that's another signal. And whatever prices are between them, that's range trading, and so on. So these are the types of indicators. However, there are many indicators out there. So which one are the best to use? Now, if you look at the indicators one by one, right? Let's assume that we are using the parabolic SAR and we're using the simple moving average and also the stochastic, right? That's a strategy. A lot of people use it as a strategy. So what's the idea over here? The idea over here, you need a system, a certain system that tells you what tells you this. Uh, you need an indicator that tells you how to manage your own risk and your money management. You need another indicator that gives you if there is volatility inside the market. You need another indicators that gives you confirmation. What do I mean by confirmation? A confirmation to enter now whenever they cross each other. So for instance, two line cross or middle line cross. And another indicator similar to the first one. But however, if I'm using two line cross over here, I would rather use a middle line cross. If I have my main indicator, for instance, the stochastic is a two line, my another confirmation would be a middle line cross. Okay. Also, you would need either one of them, be used as an exit indicator. Okay, as an exit. So I enter here after I reach, let's say, 60 pips. However, my main target was 100. Would I know, for instance, from fundamentals, a news came and there are chances that the price might go down now. I've already reached 60 pips. Should I leave or not? You need an exit indicator that tells you to get out, even if my take profit never got hit, for instance. Okay, so they usually are best used. The ones are the best used for as an exit indicators are the two line. Okay, because the indicators, we need to find indicators that give you a trending prices. Okay, not just only reversals. A lot of traders, a lot of new traders use the indicators as reversals. They tend to find, they want to find the lowest price to buy from or the highest price to sell from. Sometimes it's better to wait for the prices to go a little bit higher than enter the market rather than wait for a really low price. I need more confirmation. That's why I use the indicators as a reversal, this trending. Okay. Also, we need something that tells you, for instance, whether prices are going up in general or going down in general. It doesn't tell you to enter now, but it tells you, it allows you to either only to buy or either allow you to sell. That's as a baseline. A baseline. So for instance, over here, the MACD, if you look at the moving average, every time, if you look at the moving average, in general, whenever prices are above the moving average, that's it means I'm allowed only to take buy signals from any other indicator. And whenever prices are below the moving averages, I'm allowed only to take sell signals. So for instance, if we go deeper over here, so here it gave me a signal to the upside, all right, here. Okay, now since prices are below moving average, I wouldn't take this trade, even though it's a winning trade. That's why you need to have a really good baseline. So for instance, over here, it gave me a buy signal. Look, the stochastic gave me a buy signal over here. Yeah, it already went almost near the overbought territory. However, it gave me a buy signal. It went up a little bit. However, later on, it continued to go to the downside. So I wouldn't take this trade, but I'd rather take this trade over here. The sell signal over here. Okay, the sell signal was much better for me. Okay, however, we would face sometimes a buy signal which are winners. That's why I would rather wait for prices to go, because the probability that prices would go down is much higher than the probability of prices going lower. Okay, if the prices are above the line. However, whenever prices are below the line or below the moving average, the probability of prices going down is much better or much higher than the prices going up. Okay, if you, especially for the forex market. So for instance, every time, look over here, every time prices are above moving averages or above the moving average, it's upward and upward. Every time it goes below, downward. Similar before. If you go back, similar. Okay, so this plays as a caution. Okay, the baseline. So how many moving averages do we have? Okay, we have, first of all, we have a simple moving average, we have an exponential moving average, we have also smooth and also linear. Which one are the best? It doesn't matter. All of them give you a certain setup. However, it depends on the other indicators that you are using. So for instance, some indicators, depending on their settings, okay, they are super fast. Okay, they have a parameter and they have the K and the D, for instance, for the, however, if let's say, if I increase this or played with this, can you see? It changed. It changed. So if you play with the, hello, sorry guys, my mic got disrupted. Can you hear me, by the way? Just to make sure that the mic is, you can hear me very well now. All right. Um, all right. So that's in terms of the settings. So if you, for instance, let's add another indicator. Let's use the MACD. All right. So the MACD, basically, it's very simple to use. Okay, the MACD is used for two purposes. One of them is called moving. It's called entering the market. The other one is continuation trade. Okay, there is continuation trade. So what do I mean by entering the market? Whenever prices cross each other, okay, cross each other to the upside, and they are still above the zero line, that's an entry to the upside. So for instance, over here, exactly here, this is for the euro dollar on the daily basis. Let's use the 4 hour chart. Yeah. So here there was a signal, a reversal, and prices closed. Can you see? Closed above the moving average. So now I'm allowed to take buy trades. At the same time, I'll need to wait the lines, these two lines, to cross above the zero. So for instance, here, exactly here, the lines, both of these lines, actually, my initial signal was here. However, both of them went here and told you to enter. So if you entered here, this, all of that is yours. The maximum is 114 pips. That's on the 4 hour chart. That's for the euro dollar. Similarly, look at this one. Look at this trade. Now, the moving average, it doesn't allow me to take trade to the downside. Why is that? Because it's super slow. I need to make it a bit faster, more reliable, and more, let's say, correlated to the indicator that I'm using. So I need a little bit faster. What do I mean by faster? The number of periods is lower. So let's say I'm using 30. Okay. So every time cross below, that's a signal. Every time cross above, that's a signal. So here, it gave me a signal. If you look at the 4 hour chart, that's a crossover almost below. Let's say we took this one, all right? Crossed below the moving average, and also it gave me a signal over here, exactly here. So both of the lines actually almost here told me to sell. Now this was a selling, this was almost a winning trade, 40 pips. If you either took the trade exactly at the signal, you would get in a really good trade. If you waited for more confirmation, this was a really good trade over here. So first of all, I got 50 pips, and then prices went above again, up again from here to here. That's almost 38 pips, and then went up, but went back again. But if you hold on to the trade, you almost got 80. So I need to know where is my target. So let's say this gave me a signal. How much should I target? There is a risk management or money management tool. So if you add the average true range, if you add the average true range, I know it's a bit hectic now because so many indicators inside. I don't look at the chart itself, but rather I look at the number over here, the 0.31. All right. Okay. So the 0.31, or let's say here at this moment over here, it was 0.23. Here, 23 pips. What does it mean? 23 pips is the expectations of prices to go down. 23 pips. That's the average movement. So the average movement of the past 14 candles, that's the equation. 14 candles, or let's say this is 30. I need to make it 40. I need to make it 14. The normal setting. So over here, exactly at this candle, if you look at the ATR, 26 pips or 25 pips. So I need to target 25 pips. So if we need to calculate 25 pips, 25 pips, almost here, 25 pips, almost here, exactly here. Did the prices reach the 25 pips? Yes, it did, and it moved much more. So what do I need to do? Once prices, this is a win situation. Sometimes the indicator give you many false signals. Okay, so the many false signals, how can I tell what is my win rate? What is my win rate for this indicator? So how can I test it? This is the testing phase. So let's remove the indicators over here just to have one sole indicator. All right. So you can use this for any indicator, any indicator, no matter how you see it, no matter how you have the signal. Use this method of testing an indicator. Use it especially on the daily. All right, on the daily chart. Okay. So every time you see a signal, you need to have a line over here. So for instance, a crossover and almost here, almost a continuation trade here. So we have two trades. We have trade over here and a trade over here. So what was the ATR once the signal gave me? So here the ATR was 0.64. That means 65 pips, almost 65 pips. You need to calculate how much pips did it move. Did it move from the moment it gave me a signal 65 pips? Definitely did. It's more than 70. So this one is, you need to record it. You need to put it somewhere. You need to say this is, so for instance, I usually make my winning trades as, let's say, green, and my bad signals as red, and then I count the number of lines over here, and I can tell, let's say we have how many signals we have. So we have here another signal, that's a winner trade, definitely winning a trade. Another one over here, that's a loss, almost a loss, depends. I'm gonna think it's gonna be a loss. All right. And another signal somewhere from here, let's say another signal here. This is definitely a loss. Okay, and now we have another trade to the upside, still not decided. So we have, how many trades do we have? We have almost sorry, we have almost 4. Yeah. So this trade, how much was the ATR? 66. Did it move 66 pips first, or did it go below? Let's say my stop loss gonna be, where's my stop loss, by the way? My stop loss gonna be this number. If you calculate it, 66 times 1.5, so almost 100. Always use the ATR times 100 times 1.5, so you can tell where's your stop loss. You're supposed to be stop loss somewhere around there. So my stop loss is gonna be, let's say, somewhere really here, like 100 pips. So 100 pips almost here. All right. You need to find out whether prices reach the 66 first. 66, almost 66, like somewhere here. From here to here, 66. Yeah. Whether prices went reach this one or reach this one. Okay, from your entry. Okay. So from here to here, this is my entry. I need to find out if my stop loss got hit first or my stop loss got or my take profit. So my take profit is the ATR itself. Okay. So it almost got hit, almost, but it didn't. And eventually my take profit got hit. So this one is a winning trade, right? Let's look at the another trade over here. We have a trade over here. This is my entry. My stop loss is going to be somewhere here, and my entry going to be here. My take profit going to be how much pips? 65 also 65. Yeah, that's another winning trade. Did I get the 65? Yeah, it did more, even more. Okay, that's two trades, for the time being, two trades in the daily chart, two winning trades. Let's take a look here over here. Exactly 65 pips. Definitely reached the 65. Yeah, did reach the 65, and that's a winning trade. Now let's take a look at this one. This one gave me a signal to the downside. How many pips? 65 also. So I need to put to the downside 65 somewhere here. And another one here. And my stop loss is going to be somewhere like 100 pips. So from here to here, 100 pips almost. Yeah. So here, I got my stop loss got hit. My take profit didn't. So this is a loss. So if you can calculate this, what's your win percentage? Based on, let's say, how much? Almost 3 month data. Almost 3 month trading. Okay. So if you look at this, we have total three trades divided by 4. So your win rate, this win rate for the past 2 months, 75%. Okay. Apply this for 6 months or even 1 year. Use any indicator that you want from this system. Okay. From this system, for instance, any indicator. And based on the ATR, okay, so your initial target should be the ATR itself. Your stop loss should be 1.5, and based on that, test it. You would find out that whenever you go higher time frame, the indicators give you better results. Okay, so that's one way to do it. That's one way to do it. Now let's assume that I found an indicator online. Okay, you can find many indicators online. These indicators can be used very easily, and you need to download them. All right. So, oh, sorry. Okay. So let's say we downloaded this indicator called, let's call it the a certain moving average. Okay. I've downloaded a certain moving average. Okay. As you can see, oh, 1 second, 1 second. Sorry. Here's the indicator. Okay. I need to put this indicator inside the MT4. How can I do that? Basically, you go to this metacode. Okay. This tab over here, it's called metacode. You click on it. All right. Once you click on it, it would give you another tab, another window. Click on File, Open. All right. and then go to the indicator section. It would give you like this. Go to the indicator section. What you do next is that you go for your downloads, okay? Your downloads. You take it and put it inside. Just copy and drag it. All right. Okay. I already have this, but this is one way to do it. Okay. Once you're done, just cancel and then go back to your navigator, and then click refresh. Once you do that, you will have your indicator inside. Okay. That's one way. Now let's talk about certain indicators where you can actually play with them to make them better than they are. So for instance, I'm using the RSI. How can I make it better? Okay, the oscillators, the RSI. Okay, the RSI is an indicator. Originally, use the way we use it is oh sorry, this is MFI. Sorry. So insert indicator, oscillators, relative strength index. Okay. Why is that happening? 1 second. Yeah, here it is. Okay. Now I can make this indicator way much better. Why is that? First of all, if you look at the indicators, how many times it gave me a signal. Now, every time the line goes above, you need to be careful that because once it goes below it again, once it enters the 70, that's an overbought. That means it's gonna reverse later on. So look, if you look at here, exactly here, this area, this candle exactly, it told you to sell. Now you could have won 80 pips first. However, later on, it lost you another 180. So it gave you a reversal situation. However, it didn't give you the whole pie. So it's a reversal indicator. I wouldn't use it as an entry. I would rather use it as an exit. So if I entered somewhere around here based on the MACD, I would rather use it as an exit here. So I enter here, exit exactly here after almost. This is on the daily basis. Imagine if you're using the 1 hour or the 4 hour, similar. Okay. So for instance, I got an entry over here based on the MACD. That's my main confirmation. And I got out exactly here. I wouldn't wait for my take profit to get hit. So I entered here and I got exit here. That's 120 pips. Okay. Rather than use it to enter a reversal, but rather use it as an exit. Okay. Another indicator you can use it for exit indicators is you can actually use something called, you will find it where? You will find it at the indicator section, custom, something called Heiken Ashi. Okay. Heiken Ashi. It's similar to the Japanese candles. Okay. However, I wouldn't read it. I would read it this way. Every time a candle change from from white to red, that's a bearish signal. Okay. Every time it changes from red to white, that's a bullish signal. However, this is an indicator was based to find reversals similar to the RSI. However, I would rather use it as an exit. So originally I told you to enter here, if you remember, at this candle. Okay, if you remember somewhere here, and I told you to exit based on this candle over here. Okay, if you add the RSI, if you add the Heiken Ash, it will have it already confirmed to you at the next candle also to get out. So rather than only listen to one indicator, I would rather choose two exit indicators to be confirmed together. Okay, so the more confirmation that I get, the better the indicator becomes. Okay, this is one way to look at it. So if you go back to the oh sorry, if you go back to the system that I just gave you, A risk management indicator, basically it's the ATR, and also it becomes a volatility indicator. Whenever this number, the number of the ATR increases, the more volatile the instrument becomes. Okay. However, I can use it also as a risk management by multiplying 1.5 times the ATR itself. So I had for the GBP USD, if you remember, 65 pips. I would use 1.5 times 65, almost 100 pips. So my stop loss is going to be somewhere around 100 pips. Okay. A confirmation indicator, whether it is a two line or a middle line cross. So either you use the RSI or the middle line cross, the MACD for instance, or even the stochastic. Okay, there are different many types of indicators. You will find, based on the 35, you would find many indicators that have only one line. However, you need to make it two line cross. I will show you how now. You need another confirmation indicator somewhere inside the chart. So this indicator for by the way, for the high, can actually, I only put it only when I have a trade already. I remove it when I don't have any trade at all. Okay, so first of all, I have my ATR. Sorry, I have my MACD. Add to it the average to range. Oh, sorry. Oh, something wrong. 1 second. Okay, that's two indicators. I need to add the moving average. 30. Simple, doesn't matter. Just choose one particular moving average that you like so much. Use it this way. Every time prices are above it, only buy signals allowed. Every time prices are below it, only sell signals allowed. Okay. And now that's the baseline. My first confirmation indicator. Let's say we use another confirmation. For instance, something like for a run up and down. All right. Two line cross. Okay. I have a middle line and there's two line cross and another two line cross over here. Okay. Now, also, the last thing to do is, let's assume I want to take a trade. So let's go for the euro dollar or for the pound dollar. Okay, on the 4-hour chart. Okay. Now, first of all, I need to check, did I get a signal or not? First of all, I got a signal to sell over here. All right. And I'm waiting 7 more minutes. I need to find out after 5 minutes, is there any signal? There is no signals. So I need to change. I need to find another opportunity. I need to find whenever prices actually close above or below or a two line cross from here. That's how I look at the signals. So this is the Dow Jones, for instance. Still nothing. There's no two line cross till now. Nothing. As you can see, still no crosses. I'm waiting for a cross. So I would rather wait. Here, there's a chance prices might close below. So I would rather wait 7 more minutes or the next candle. Okay. Still nothing. Still nothing. This is different items, yeah? Now here, it gave me a sell signal, as you can see, a sell signal over here. But since prices are above, I'm not allowed to take the sell signal, so I'd rather wait. Also, a two-line crossover, I'm waiting from the Arun up and down. Every time there's a crossover, like this one, an upside, also from the downside over here, and so on. So I would rather wait. So let's say I'm looking for a certain asset, a share, certain share. Okay. So this is the 4-hour chart. Now here, prices went still below. Price, there is a crossover was here. On the 4-hour chart, I would have taken a trade from here to the downside. Tesla, for instance. Yeah. Now, once I took a trade before and prices went my way, what should I do next? Okay. The next thing you should do is something called continuation trade. You need to wait for this indicator, for instance, to give you another bearish cross below the zero line. So I would rather wait for both of them to cross over, or it meaning prices must go up a little bit and then cross down. Once they cross back down again, that's an entry. Okay, that's an entry to the downside, because it would give me a bearish signal such as the arrow down, also below moving averages, and already below the zero line. So I need a continuation trade. So I re-enter the market again, assuming that you were somewhere here and then you got out somewhere here over here, let's say, wanted to enter re-enter the market again. You wait for another bearish cross over here. Okay. Now, now this is it for the for today's session. I know there are many indicators. However, you need to find out if they are two line or zero line, or even both of them. Some indicators, for instance, like let's say the Bollinger Band, right? The Bollinger, oh sorry, the Bollinger Band is inside. It's an inside indicator. Okay, inside the chart. Okay, similarly to the instead of using the indicator, the moving average, I would rather wait for prices to close above or below to decide where is my trading. So here it closed below the middle line. Okay, closed below the middle line. I would take a trade from here and then wait for the prices to close below. Once the prices close below the lower band, for instance, okay, that's a signal to exit, not a signal to buy, but rather I would use it as a signal to exit, similar to the RSI. Every single reversal indicator, use it as an exit indicator to get out. And every single indicator that give you two line crosses, that's an entry indicators. Okay. Some other indicators, like for instance, you need to find an indicator that give you one line. 1 second. So for instance, this indicator gives you nothing, no signals. Okay, a random indicator called force. Okay, you can make it better by adding a moving average to it. All right, so use a moving average. For instance, you go to the moving average. The MA method is similar. However, the apply to must be first indicators data. Okay, once you do that, it will pop up here. Now, if you can see, let's say I'm using 15. All right, every time there's a crossover. Now it's a two-line cross, by the way. Every time they cross each other, that's a signal to either to the buy or to the downside, depending on how you see the indicator. You would find many indicators once you download them or you see them. You would see many indicators only with one line. Add a moving average to it. It would definitely give you a signal. Okay, this is one way to look at the indicators. I know it was a bit hectic to many information I gave you today. However, we have another webinar coming in the coming 2 weeks about the trading system, how to use it professionally, even much better, and even the rules on a certain system that I've already tested myself, and I will give it to you. More accurate indicators, more accurate way of looking at the market. I've created a system myself, and basically I have a set of rules that I use and a certain strategy, and based on the analysis that based on the indicators that I've tested using the ATR, I found out a really good system that give me more than 65% accuracy, and sometimes more than 70%, depending on the item itself. Okay, that will be the main topic next time. Will be about trading strategy, trading the exactly how to enter the market. So if you guys have any question regarding today's session, please send me, please shoot them. I will definitely answer any question that you have. What is MT5 and what is it better than MT4? Personally, I find them both similar, especially for retail traders. Okay, it's the MT5 is mainly used for corporate business traders. Let's say it has more functionality and you can actually put more items to analyze. However, it's similar to the MT4. So basically, they are the same. All right. Is there um, any other question, please? I think it is accessible offline. It is recorded and it will be accessible offline. However, you need to contact one of the salesperson in Kenya to get you this information, this recorded webinar. All right? Yeah, for gold, usually I would rather use a reversal indicators to enter rather than exit, because the reversal indicators are mainly depends on supply and demand, the overbought and oversold. So I would rather use the for instance the MACD with another indicator called the volume hour percentage. I would give you this I would told you about this trading strategy regarding Forex and gold in the next webinar. It will be about trading strategies. All right. Are they similar to the FX? No, I have two different systems for each market. For each market, I have two different systems. So I would use, for instance, the MACD for the Forex market, but I wouldn't. I would use the MACD for the Forex market, but I wouldn't use it for the gold, for instance. Also, I have different baselines for each item. So for instance, for the currencies, I have the Ichimoku baseline, the Kijinsen for the Forex market. For the gold, I would use simple moving average rather than using uh, the um, the Ichimoku one.
There's no question, Shanti, from my side. I think today people are quite, it was quite elaborate. I don't seem to get any questions from my side.
All right. Thank you guys for joining us in today's webinar. I would like thank you everyone for sticking with us into this webinar, and I would love everyone to join us in the next webinars for more information. Please stay updated, follow us on our social media channels, and thank you so much.